Okay, thank you, Shokji. Hello, everyone. Good morning. I see people are still joining in. We can wait for a couple of minutes before we start for today. Good morning, Sananathan. Okay, I hope whoever is joining in has joined in by now, and we can start for today. A very warm welcome to everybody. I hope studies are going good for everyone, and these are the revisionary classes focused upon uh, practical questions. So I expect everybody has attended the regular virtual live virtual classes conducted by ICAI and have taken maximum advantage of those sessions, and you are well through with the concepts. So I'll try to pick up the concepts as well as and when we are solving the practical questions today, so that you revise your concepts also. So topic for the day is cash flow statement. So we will be doing some full-fledged practical questions on the cash flow statements preparation. So please uh, ready your calculators and the paper sheets or the notepads wherever you would be drafting the cash flow statement, and then probably when we will discuss the solution, you will be able to match if you are doing all the treatments rightly or not. Is that fair with everybody?
Yes, sir.
Perfect. So before jumping on to the questions, can we quickly revise what we have learned so far in the statement of cash flows standard in day 7? Anybody? The crucial 5 points, 5 key learnings from the standard, which you are able to recall that yes, these are the key learnings which we are able to recall, which we need to, remember always about the standard. Anybody? Okay, what's the applicability of the standard? Is it applicable to all the companies who are preparing the financial statements under India's regime, or is it selectively applicable to certain companies? What do you think? Applicable to all companies who are preparing the India's financials? Yes or no?
Yes, sir. It is applicable, sir.
Right. So a statement of cash flow is a integral part of financial statements set, right? So every company who is preparing financial statements under India's has to prepare the statement of cash flows mandatorily, right? So there are no exceptions, exemptions to any company for the preparation of the cash flow statement, right? Then, while preparing the cash flow statement, which method we used to follow? Direct method, indirect method. There are two methods, right? So, which is the method we always or generally follow?
Indirect method, sir.
Indirect method, right? So all the companies, generally prepare the cash flow statement by indirect method only, right? So although there is a direct method as well, but that is not, used widely, right? Now, while preparing the statement of cash flows, how do you treat the foreign currency held as on the balance sheet date? So if any company is, having cash in foreign currency, right? Dollars, pounds, yens, Japanese yen, then what's the treatment for that currency? So I'm just trying to quickly revise a few basic, concepts which you must have learned during the session and you must have studied. So that before we kickstart with the practical questions, we are at least on the same page in terms of understanding. So what do you think? What's the treatment for the foreign currency held? Where we present that in the statement of cash flow?
A cash and a cash equivalent position.
Cash equivalent, right? So whatever the opening cash was there in foreign currency, right? So that will be presented in the opening and the closing in the closing, right? And if there is any interest earned on any, foreign currency bank balances, right? How that interest earned is treated. So suppose scenario is a company is maintaining a bank balance in foreign currency, right, in foreign bank, and there are some interest, credited to the bank account during the year, where those interest will be accounted for and presented.
If it is relating to the investing activity, whether it is a if it is a investment,
Mm-hmm.
if it is from the fixed deposit like that investment, if it is in the operation, it will be the operating activity.
Mm-hmm. Okay. Correct. So if it is a interest earned on any investments like fixed deposits, right? So of course, it will be a investing activity, interest earned on the fixed deposits. But if it is, coming on savings account or a normal account, not a fixed deposit, then what would be the treatment?
It will be the operating activity.
Sure.
See, if it is a bank means they are investing something. It is a operating activities. What are the interest they earn? If it is a other
Mhm.
than the banking, then it will be the part of the investing activity.
And how income tax is treated while preparing the statement of cash flow? What is the treatment of the income taxes paid during the year?
Income tax is the operating activity.
Operating activity always.
Not always. If it is relating to income tax paid on the capital gain, it will be the investing activity.
Right. So the classification of the tax expense would depend on the nature of the underlying, transaction, right? Is that clear? So income tax in general, if nothing is mentioned in the question, then we will assume that this is the income tax liability on the business income of the company, right? So by default, it is a operating. But in case there are specific facts given in the question, for example, capital gains earned by selling equity shares or by selling land and building during the year, right? Or, taxes paid on the dividend payments. So if certain specific nature of transactions are, clearly given in the question, then the income tax expense on those transactions will be classified basis on where those transactions are classified originally. Is that clear? So tax expense follows the transaction. Fine. Any question on this?
No, sir.
Okay. So let's start with the first question for the day. Company has provided the following information regarding the various assets held by the company on 31st March 2001. Find out which of the items will be part of the cash and cash equivalents for the purpose of the preparation of the cash flow statement as per the guidance provided in India 7. Right. So the ask in the question is which of the below items will form part of the cash and cash equivalents. Right. So what is the definition of cash and cash equivalents? Are you able to remember?
Yes, sir. Cash and cash equivalent is a short-term and highly liquid investment that are readily convertible to the known amount of cash, which are subject to the insignificant risk of change in value.
Perfect. Right. So cash equivalents are the short-term, highly liquid investments that are readily convertible to the known amounts of cash and which are subject to insignificant risk of change in value. Right. Cash equivalents normally constitute, or have the short maturity less than 3 months. Right. It can also include bank overdrafts. Are you able to recall this discussion from your main session on the India 7? Bank overdrafts can also form part of the cash and cash equivalents if the
Yes,
company's
yes, sir.
treasury function considers the it is an integral part of the cash management activities carried out by the treasury department, right? So if the company says that it is a normal part and parcel of our treasury management, right, then bank overdrafts will also be included in the cash and cash equivalents, right? So this was the main difference between the IGAP and the NDS, right? So under IGAP, bank overdrafts were never part of the cash and cash equivalents, right? They were always part of other current liabilities, right? But under NDS, this is an option available in case company wants to include them in the cash and cash equivalents. Then they need to demonstrate that they are integral part of the cash management activities carried out by the treasury function of the company, right?
Yes, sir.
Perfect. Now let's try to give the answer for these each of these items. So fixed deposits with SBI, or maybe instead of discussing one by one, you want to try your answer on your notepad once, so that we can see if we have done the things right or not, right? So maybe I can give you a couple of minutes just to write down the answers for these 8 items basis on your understanding, and then we will discuss each case so that you will be able to identify if you have done all the things right or not, right?
Okay,
So
sir.
just try to note down your answers on this. And whenever you are saying something is not part of the cash and cash equivalents, then also mention why, the reason. And if you are saying it is a part of cash and cash equivalents, then also say why, right? So one liner you can note down on your notepads, and then we will discuss. for discussion?
Yes, sir.
Okay. So what's the answer for the first item? Fixed deposits with SBI?
No, sir, it is not cash and cash equivalent. Reason is the deposit is not a short term. It's mentioned in 3 years,
Mhm.
not less than 3 months.
So this is not a cash and cash equivalent, correct?
Yes, sir.
Then next, fixed deposit with HDFC, 10% coupon rate. Original term was for 2 years, but due for maturity on 30th June. That is, it is getting matured within next 3 months from the reporting date.
No, sir. This is also not as a cash and cash. Reason is not from that reporting date. Its original
Mhm.
original deposit period should be less than 3 months. It's a two
Mm.
years.
Right. So because the originally the FD was booked for a 2 years period and it was not less than 3 months, hence it will also not form part of the cash and cash equivalents in spite of the fact from the reporting date it is getting matured within 3 months, right? So 3 months from the reporting date shouldn't be the criteria. The criteria should be whether the FD was booked for less than 3 months or not, right? So original term matters, right? So it is also not the cash and cash equivalents, correct?
Yes, sir.
What about the third? Redeemable preference shares in ABC Limited.
Yes, sir. We will include this because it is less than 3 months. From 31st January is given.
Hmm.
Uh, February, March, April. Yes,
Hmm.
we can include in it.
Okay. So you are saying because it is originally due to be redeemed within a 3 months period and now sitting to be redeemed within a month from the reporting date and hence it will be included, right?
Yes, sir.
Perfect. So it will be included in the cash and cash equivalents, right? What about the cash balance at the various bank accounts? All the branches of all the banks are in India.
Yes, sir. It is very much cash and cash equivalent.
Perfect.
Highly
Cash
liquid.
balances, correct. Cash balances at various banks, all international branches of Indian banks.
Yes, sir. This can also be included in it.
Can be
We
included or will be
discussed
included?
just before. Will be included.
It will be,
It will
right.
be the cash equivalent.
Correct, correct. Cash balances at various banks, branches of the foreign banks outside India.
Yes, sir. This also we can include it. We will be including in it.
Correct. So, irrespective of the fact which bank is this, Indian or foreign, where the branch is in India or outside, doesn't matter, right? Neither the status of the bank nor the location of the branch matters. The only thing matters is if we have any bank balance, right? That will form part of the cash and cash equivalents. Is that correct?
Yes, sir.
Bank overdraft of SBI Fort branch. So we have a overdraft with the SBI Fort branch.
Yes, sir. This is a temporary overdraft. This will be included, but it should be
Hmm.
the form part of the integral part of the cash management.
Correct. So suppose if there are two companies, company A and company B, both are having some overdrafts, right? Company A has the policy of, considering the overdraft as a integral part of the cash management activities, right? Carried out by the Treasury Department. Then company A will include, bank overdraft in the cash and cash equivalents, while company B which does not consider the overdrafts as an integral part of the cash and cash management activities, then company B will not consider the overdraft in the cash and cash equivalents, right? So there is no clear yes or no answer to this. It is dependent on the fact what is the policy of the company, right? So if the company follows the policy of including overdrafts within the cash management activities, then it will form part of the cash and cash equivalents while preparing the statement of cash flow statement, right?
Yes, sir.
Treasury bills.
Treasury bills is 90 days maturity. It's included in cash and cash equivalent.
Perfect. Right. So we are very much clear, how we are, what we are including and what we are not in the cash and cash equivalents, right? Any questions, any doubts anybody wants to ask at this stage?
No, sir. Clear, sir.
Okay. So now we have a complete question on the preparation of the statement of cash flows, and I want you to be participative in preparing the cash flow statement, right? Because unless and until you prepare it by your own hands, right, you will not gain the confidence, right? And in the examination we not only are required to prepare the statement of cash flow, but we are required to prepare the statement of cash flow with a good presentation of all the working notes as well as within the limited time, right? So neither we have the luxury time in the examination, nor we can prepare half baked or poorly presented cash flow statement, right? So if we want to get score good marks, we need to be careful about both the presentation as well as completion of the question within the time allotted time, right? So try to practice both whenever you are doing the practical questions. So let's try our hands on this. Following is the balance sheet of the Kuber Limited for the year ended 31st March 2002. All the amounts are in lakhs, right? So this is the balance sheet given. Non-current assets, property, plant and equipment, right? Intangible assets, other financial assets, deferred tax assets net, non-current, other non-current assets, total of the non-current assets, right? Then current assets, financial assets, investments, cash and cash equivalents, other current assets, total of the current assets, and the total assets, right? Normal standard balance sheet, which we always see since ages, right? Equity, equity share capital we have, then other equity, then the total, and then liabilities, what we have in the liabilities, financial liabilities, long-term borrowings, other non-current liabilities, total of the non-current, and then current liabilities, financial liabilities, trade receivable, bank overdraft, other current liabilities, right? So all these items we have, and then total current liabilities, total liabilities, total equity and liabilities, right? So this is the standard balance sheet which we used to see always. Then there are certain additional information, right? So let's read this information carefully. Profit before tax for the year ended 31st March 2002 is how much? 4450 lakhs. Interim dividend paid during the year is 450 lakhs. Depreciation and amortization, which is already charged in the statement of profit and loss during the year, are as under. For the property, plant and equipment, it is 500 lakhs, and for the intangible assets, it is 20 lakhs. During the year ended 31st March 2002, two machineries were sold for rupees 70 lakhs. The carrying amount of these machineries as at 31st March 2002 was 60 lakhs. So 60 lakh machinery sold at 70 lakhs, right? Income taxes payments during the year is 105 lakhs. Other non-current current assets and liabilities are related to operations of the Kuber Limited and do not contain any element of financing and investing activities. Using the above information of Kuber Limited, construct a statement of the cash flows under the indirect method. Right? All clear with the information? So I
Yes,
want
sir.
you to spend some time, construct the statement of cash flow, also populate the relevant working notes if any uh, required, and then probably we will discuss the solution along with the presentation, desired presentation, right? So I can give you 10 minutes for this. You start,
Okay, sir.
and then we'll see where we reach.
Okay, sir.
Okay. I hope you must be able to give the adjustments done, all the adjustments by now.
Yes, sir, but not fully.
Mhm. So at least you are done with the computation of operating activities cash flow.
Yes, sir.
Okay. So what is left? Investing and financing.
Yes, sir. We can
Okay.
discuss, sir. No problem.
Okay. In case you want to quickly finalize, I can give you 2 more minutes so that you at least get to know that if you have arrived at the right answer or not.
Okay, sir. We'll try.
Mhm. The more you do the classwork and the homework, the better you are prepared for the big day. Okay. So I think you must be ready now for the discussion. Should I start?
Yes, sir. Yes, please.
Okay. So whenever we start uh, preparing the cash flow statement, we start with net profit, right?
Yes, sir.
Now, what is the uh, uh, starting item, net profit after tax or net profit before tax?
Net profit before tax only we will consider actually, usually.
Mhm. So as such, there is no mandate by the standard, right? So you can start with the net profit after tax, or you can start with the net profit before tax. That is all your choice, right? So standard doesn't mandate on this part. The only thing is you need to be careful about the tax adjustment then, right? So I advise you be careful. If you are picking up net profit before tax, right, then there wouldn't be any tax paid addition. If you are picking up the net profit after tax, then taxes paid would be added back, right, to arrive at the net profit before tax on the face of the statement of cash flow preparation, right? Furthermore, it is also dependent what information piece is given in the examination question, right? So if the examination question, instead of giving the P&L, simply gives you the net profit after tax, then you have to start with the net profit after tax only. But if in the examination, the P&L statement is given where the both the items, net profit before tax and net profit after tax are coming, then you can start with any of them, right? Okay, so because in this question we are given explicitly net profit after tax as a part of the additional information. So we started with that. We have added the taxes paid, which is also given in the question, right? 105. So for 555 we have arrived at. Now we will be adding back or adjusting, the non-cash items, right? So what are the non-cash items? Depreciation and amortization given in the question, correct? 500 plus 20, right? 500 is for the property, plant and equipment, and 20 is for the intangible assets. So 520 we have added back as a non-cash item. Anybody wants to ask anything? I'm getting the notification. Okay. Then we will deduct the gain on the sale of machinery, right? Why? Because this is a part of investing activity gain, right? So we will be deducting it because it is already included as a other income in my net profit after tax given in the question, right? How much is that? 70 was the 70 was the sale value and 60 was the carrying amount. So 10 lakh was the gain, right? Which should have been, part of the net profit after tax given in the question. Then we will deduct the increase in deferred tax assets, right? So 855 minus 750. So these are the balances given in the balance sheet. So we will simply took the delta, right? And we have, after adjusting all these items, we are sitting with the balance of 4960. Now we'll start doing the adjustments for the working capital changes, right? So what is the rule for these adjustments? Always add if there is a decrease in assets and less if there is an increase in assets, right? So decrease in assets is always added, increase in asset is always deducted, and the mirror effect for the liabilities items, right? So now we'll start adjusting these one by one. So in the balance sheet, you are able to see the financial asset. So 170 minus 145, 25. Then other non-current assets in the balance sheet, you must be able to see, right? What is the balance for other non-current assets? 195 and 85, right? This is straight away coming from the balance sheet given in the question, right? So the delta you are considering. Similarly for decrease in non-current liabilities, then increase in current liabilities, and then increase in trade payables. So all these items are straight away coming from the balance sheet. As such, nothing much we need to do here, right? So we will simply calculate the delta between the two reporting date balances and make all these adjustments, right? Now we will deduct the income tax expense, right? Now, as I previously mentioned when I started the discussion today, that income tax follows the underlying transaction, because in the given question there is nothing mentioned about income tax expense nature or it is related to which transaction. So it is assumed to be operating activity. So hence we are deducting the income taxes paid here, and then we are arriving at the cash generated from the operating activities. Now, I just wanted to understand from you if you have arrived at this figure correctly or was there any mistake in your solution.
Yes, sir. I have arrived correctly, sir, on this.
Perfect. Perfect. Now we'll start with cash flow from investing activities, right? So sale of machinery is given in the question for 70 lakhs. So 70 lakh is the sale proceeds, right? And we are talking about the cash movements, right? So how much cash we have received? 70 lakhs, right? So 70 lakhs is the cash received from sale of machinery. right? And why it is investing activity? Because when we purchase plant and machinery, we say that we have invested into the business. And when we sell the plant and machinery, we say that we are realizing those investments, right? So basically, PP&D is a investment for the company, and hence selling the PP&D is a investing activity, cash flow from investing activity. Purchase of machinery, right? Now, how did we arrive it? So 500 was the depreciation given in the question, correct? 12,500 is the balance, 13,000 is the new balance, right? And 60 is the carrying amount of the machine sold during the year, right? So if we do all the adjustments, right? So how we will be doing these adjustments? 12,500 minus 500 the accumulated depreciation during the year, minus में 60 the carrying value of the machinery sold, and then all this is deducted from the closing balance of 13,000 given in the balance sheet, right? So closing balance minus adjusted opening balance means there is a balancing figure of 1060, which will be nothing but the additional purchase of the machinery. Are you able to understand this?
Yes, sir. I missed 60 rupees.
Right. So let me elaborate a bit more. For example, this was my plant and machinery account. Okay, correct. So what was my balance? Opening balance 12,000, 12,500, right? And my closing balance is how much? Given in the balance sheet 13,000, right? Correct.
Yes, sir.
Then I will be deducting the depreciation charged during the year. How much? 500, right? And I will be deducting the carrying value of the asset sold during the year, right? So what was the carrying value? 60, right? So this number we have arrived as the uh, balance at the year end, but my balance at the year end in the balance sheet is coming 13,000. So what does this indicate? So this indicates that between this number and this number, there is another movement. And what? Another movement that could be the purchase only, right? Purchase of some machinery during the year. So even if the information is not given in the question, we need to check it on our own whether these balances are actually getting reconciled or not. If they are not reconciled and if there is a delta, right, then that means there is a purchase, right? So this hidden information we will be able to extract only if we reconcile this property, plant and equipment ledger with ourselves. Is that clear?
Yes, sir.
Now, what happens? Sometimes in the examination, the complete information is given in the additional information section, sometimes not, right? So, if it is given, so there are high chances that you will consider those, right? But if it is not explicitly given in the additional information, then if you are not ensuring that you have reconciled these key ledger balances on your own, then what will happen? You will not be doing this adjustment, right? 1060, right? You will skip on this adjustment. Then your cash flow from investing activity will be mistaken, right? And assuming your cash flow from financing activity is correct, assuming your cash flow from operating activity is correct, but cash flow from investing activity is mistaken, then what will be the end result? Your cash flow will not tally, right? And then what will happen? Because your cash flow statement is not getting tallied, then you will revisit the things. You will start seeing again and again in the additional information section whatever adjustment you are missing, but you are seeing on rechecking that I have considered all these items, and you have spent additional 5 to 6 minutes again on this rechecking part, right? Then again you are arriving at the same result. Now you are, worried about. whether you are done the question right or not. You will again spend 3 4 minutes again on this question, and the end result would be the question which should have been completed all in 10 minutes. You have already spent it 20 minutes on that, and still you are leaving this question as it is because you need to complete your examination paper as well, right? You cannot spend more time. Now you are leaving this question with dissatisfaction, fearful mindset, and paucity of time for the remaining questions, and it is building the pressure on you, and you will start picking up the next question in hurry, and chances are high you will again do some mistakes in those questions. So whenever you are practicing a question right at your home, I would advise whatever the key adjustments you have made, make a notebook, separate notebook, and register your key learnings from that practical question, whatever the key learnings you have learned by solving this question, right? So that in the examination, you can just revise those key learnings, and you are able to revise all your practical questions which you have solved in your preparation time, right? Instead of revisiting all of them, right? So, what is the key learning here which you should be noting down? Noting down key learning is you always need to reconcile the PP&D ledger on your own, right? If it is reconciling, no adjustment required under the investing activity. If it is not, then there are high chances that there is a hidden purchase of property, plant, and equipment, which is not explicitly mentioned in the additional information section. And you need to compute that by doing this ledger reconciliation. Is that clear?
Yes, sir.
Right? Now, same case for the intangible assets. Intangible assets is no more different than the PP&D, right? Only the standard is different, 16 and 38, correct? Now, what is happening here as well? Closing balance is 50 and depreciation is how much? 30, and what is the 20? 20 lakhs is the depreciation, sorry. So 20
Sir,
lakh is the depreciation, 30 lakh is the opening balance. So 50 minus 10. So it means 40 is again a purchase of the intangible asset. Correct?
yes, sir.
So although there is nothing mentioned in the additional information section, but if we reconcile these ledgers on our own, then we will be able to trace these purchases, which should form part of the investing activity or cash flow from investing activity. And if we miss on these two adjustments, we will never be able to reconcile this statement of cash flow. Right? Then
Yes, sir.
sale of financial assets, simply the delta between the two balances given in the question. So financial asset is what? An investment. If we are selling that, then we are realizing the cash flow
Yeah,
from
we are
sale of
receiving the
investment,
cash.
right? Now we are arrived at the cash flow from outflow from investing activities, right? Now, one more item which we need to be careful in the examination. If it is an inflow, then always use the word cash inflow or cash flow from the activity, relevant activity. And if it is an outflow, do not forget to use the word out. Okay. So if you miss the word out, right, and you simply say cash flow from investing activity, right, it is not appropriate. Examiner can deduct 1 mark on this, right? In spite of the fact you have done all the things right, you have arrived at the right number, your statement of cash flow is tallying, but still you are not getting the full marks. So these are the spots where we lose marks in spite of being, uh, you know, coming up with the right answer, right? So always be careful while using these words: cash generated from operating activities, cash outflow from investing activity. Clear?
Clear, sir.
Now, cash flows from financing activities, dividends paid, again given in the question, additional information, and long-term borrowings repaid. So 5,000 minus 2,000, 3,000 is the delta, right? So this is a clearly evident information from the question, no challenges, and cash flow from financing activities is also arrived. Again, outflow, right? Because we are doing the outflow of cash. Now, net cash outflow from all the activities. So if my net cash is negative, I will again use the word outflow here, right? Why I am emphasizing this again and again, so that you make a note of this somewhere in the notepad as well as in your mind, right? Operating cash flows, investing cash flows, and financing cash flows. Total cash flow, positive or negative? It is negative. Again, I will use the word outflow. Then, opening cash and cash equivalents given in the question, closing cash and cash equivalents given in the question, right? And my balance is reconciled. Clear? Any questions, any doubts on this? So, two key learnings from this solution. Number one, PP&D and intangible asset ledger, we always need to be careful about, right? Whether they are reconciling or not. Number two, if the cash flow is positive, we will say cash flow or cash generated from the operating or investing activity. If the cash flow is negative, then we will say cash outflow, right? So always use the word carefully: generated oblique outflow, right? Perfect.
Yes, sir.
Okay. So let's do this question. And after this question, we will take a break. Z Limited has no foreign currency cash flow for the year 2001. It holds some deposits in the bank in the USA. The balance as on 31st December 2001 and 31st December 2002 were USD 1 lakh and USD 1 lakh 2000 respectively. The exchange rate on the December 31, 2001 was USD 45, and on 31st December 2002 it is 50. The increase in the balance was on account of interest received and credited on 31st December 2002. Thus, the deposit was reported at 45 lakhs in the balance sheet as at December 2001, and it was reported at 51 lakhs in the balance sheet as at December 2002. How these transactions should be presented in the cash flow statement for the year ended 2002 as per India 7 discuss. What is your thought? Any thoughts?
Yes, sir. Yeah, you can go through, sir. No problem. Answer.
Mhm. Sure. So, first of all, we will say that how much is the interest received during the year? $2,000, right? And when it was credited on 31st December 2002, as mentioned in the question, what was the exchange rate on that date? 50, right? So 50 into my $2,000, how much in INR? 1 lakh. So 1 lakh is the interest amount, correct? Received,
Yes, sir.
right? Then exchange difference of US dollar 1 lakh. How we have calculated? 1 lakh into my 50 is the closing dollar rate minus the 45 opening dollar rate. So 5 into my 1 lakh. So 5 lakh is the exchange difference, right? Or exchange gain on the deposit. In preparing the cash flow statement, 5 lakh, that is the exchange difference, should be deducted from the net profit before taxes. Why? Why we will be deducting it? So whenever we prepare the P&L, okay, forget about the cash flow statement. Whenever we are preparing the P&L, profit and loss, have we already treated this item in the P&L? 5 lakh
Yes, sir. Already we have deducted from that P&L.
deducted or included as other income, exchange gain.
Exchanging included in that
Correct.
P&L, so we
So,
need to deduct it from there.
correct. So, because my P&L is already inclusive of this 5 lakh, right? So, while preparing the cash flow statement, I need to adjust the non cash items. And the gain because of exchange difference is a cash item or non cash item?
It's a non-cash item.
Non-cash item. So I need to deduct it as a non-cash items adjustment. Correct? So 5 lakh will be deducted. However, in order to reconcile the opening balance of the cash and cash equivalents with its closing balance, the exchange difference of 5 lakh should be added to the opening balance in the note to the cash flow statement. Now, what will happen? You started with the P&L, profit after tax, add taxes, add all working capital changes, non-cash items, cash flow from operating activity. Now, cash flow from operating activity will not be including this 5 lakh, right? Then cash flow from financing, investing, and then financing, and then total cash flow. Then after arriving at the total cash flow, whenever you are reconciling with the opening cash and the closing cash, it will not reconcile. Why? Because of this 5 lakh missing, right? Because your closing cash is inclusive of this exchange gain, because it is stated at 50 lakhs in the balance sheet, and opening cash is stated at 45 lakhs, and this 5 lakh you have also deducted in your cash flow statement as a non-cash item. Then your cash flow will not reconcile. So in order to reconcile the cash flow statement, what you need to do, you will add back this 5 lakh rupees in your opening balance of cash flow in the cash flow statement, so that 45 plus 5, 50, it will be reconciling. Correct? Now, cash flow arising from the transaction in the foreign currency shall be recorded in Z Limited's functional currency by applying to the foreign currency amount the exchange rate between the functional currency and the foreign currency at the date of the cash flow. Right? Any questions on this?
No, sir.
So this is how we will be adjusting the foreign cash flow, for foreign cash balance, right? While preparing the cash flow statement, so that our cash flow statement gets reconciled. Okay. So let's do this question also, and then probably we will go for a break. It's 8 only. Company A acquires 70% equity stake in the company B on July 20, 2001. The consideration paid for this transaction is as below. Cash consideration 15 lakhs, 2 lakh equity shares having a face value of 10 at the fair value of 15, right? On the date of the acquisition, company B has cash and cash equivalent balance of rupees 2,50,000 in its books of accounts. On October 10, 2002, company A further acquires 10% stake in the company B for a cash consideration of rupees 8 lakh. Advice: how the above transactions will be disclosed, presented in the statement of cash flow as per the Ind AS 7. Are you able to recall some concept after reading this question, which you might have discussed in your main session?
Yes, sir. It's a kind of investing activity, sir. When we are
Right.
investing in the subsidiary, it will be treated as an investing activity.
Right. Because we are taking a controlling stake in another company, it means we are acquiring a company. It means we are investing our cash into the equity shares, right, of another company, which will form part of our subsidiary, right? So it will be a investing activity. That is for sure. But is there anything else which you are able to recall? So India 7 says that whenever the company acquires a controlling stake in another company, right? And whatever the cash they have paid and whatever the cash they have acquired by way of acquisition of this subsidiary company, right? So the cash flow statement will be prepared basis on the net cash outflow. So what is the cash we are paying here? 15 lakhs, correct? And how much the cash company B has in its balance sheet as on the date of acquisition? 2 lakh 50,000. So 15 lakh I am paying for the acquisition of the company B, and 2 lakh 50,000 I am receiving by part of B becoming my subsidiary. So 15 lakh minus 2 lakh 50,000. So net cash outflow would be treated as 12 lakh 50,000 for the purpose of the preparation of the cash flow statement. Are you able to recall this discussion you must had in your main session?
Yes, sir.
Right? So what the standard says? So standard says whenever a company is acquiring a controlling stake in another company, right? And company is the acquiry company has any cash in its balance sheet on the date of acquisition, then that cash will be deducted from the cash consideration paid by the acquirer to the acquiree while preparing the cash flow statement. Right? So this is the conclusion of the story. Right? Now, how it is said by the standards sophisticatedly, we will read. As per the para 39 of India 7, the aggregate cash flow arising from obtaining control of subsidiary shall be presented separately and classified as investing activity. So there is no doubt about it that this is not the investing activity, right? So we are all agreeing to this. Then, as per the para 42 of the India 7, the aggregate amount of the cash paid or received as a consideration for obtaining subsidiary is reported in the statement of cash flow, net of cash and cash equivalents acquired or disposed of as part of the such transaction. Right? So, how we will report this cash outflow? As a net cash outflow only. Net means the cash we actually paid minus the cash we are receiving because it is sitting on the balance sheet of the acquiring company. Right? Further, investing and financing transactions that do not require the use of the cash or cash equivalent shall be excluded from the statement of cash flow. Right? So, what does this mean? This means because my purchase consideration forms part of two components. Component number one, cash, 15 lakhs. Component number two, equity shares, 2 lakh equity shares of face value 10 at rupees 15. So how much consideration is this? 30 lakhs,
Yes, sir. 2 lakhs into 15.
right? And 15 lakh I am giving cash. How much? 45 lakhs total consideration.
Total 45 lakhs.
Right? Now, while preparing the cash flow statement says only the cash movements needs to be presented. So whether I am going to present 30 lakh as well in my cash flow from investing activity?
No, sir.
No, because this is a non-cash item. So it will not be recorded anywhere in the statement of cash flow, right? So in the statement of cash flow, only 15 lakh, that is the cash movement, will be considered. That's what the para 42 says of the Ind AS 7, right? Then para 42A of Ind AS 7 says cash flow arising from changes in the ownership interest in the subsidiaries that do not result in the loss of control shall be classified as cash flow from financing activity unless the subsidiary is held by the investment entity as defined under Ind AS 110. So what does this para say? So there are three paras: para number 39, para number 42, para number 42A, right? So if you are able to recall these three paras, very good. If you are not, then do not mess up with any para just for the sake of mentioning in the examination. Simply you say as per the Ind AS 7. Okay. Now para 39 says, boss, whenever you are investing in any company, right, then that will be treated as an investing activity. Is that clear? Para 42 says, whenever you are paying a purchase consideration for acquiring a stake in another company, then the consideration which you are paying in cash should be presented net of the cash received sitting in the balance sheet of the acquiring company, right? So 15 lakh minus 2 lakh 50,000 sitting in the B Limited's balance sheet. So 12 lakh 50,000 would be the real cash outflow as per the Ind AS 7. Hence, for the limited purpose of Ind AS 7, is a statement of cash flow statement, we will deduct this 2 lakh 50,000 from 15 lakh which we have originally paid, and 12 lakh 50,000 will only be presented as the cash outflow from investing equity for acquiring this subsidiary. Is that clear? Then para 42A says that if the company spends more cash in acquiring some additional stake on this company, then that additional acquisition of a stake on an existing subsidiary will not be the investing activity, but it will be the financing activity. So suppose if company further spends 5 lakhs rupees or 8 lakhs rupees, like in the question as well it is given, on October 10, 2002, company A further acquires 10% stake in this company. 70% already acquired in the first phase and 10% again acquired in the second phase. So this 10% additional stake acquired for a cash outflow of rupees 8 lakh will be presented under investing activity or financing activity.
It will be the financing activity.
It will be the financing activity by virtue of para 42A. Is that clear?
Yes, sir.
So, thumb rule number one: whenever the company acquires a stake in another company, controlling the stake, that is called investing activity, right? Cash paid by the company for acquisition of this will be considered in the cash flow statement under the investing activity. If there is any cash sitting on the balance sheet on the acquisition date of the acquiring company, then that will be deducted from the total cash payment, and net cash will be presented in the cash flow statement, right? Para 39, para 42. If company further acquires another 5%, 10% stake in that company, then cash utilized or paid for acquiring this additional stake will not be presented under the investing activity, but rather it will be presented under the financing activity as per para 42A of the Ind AS 7. Right? So these are the three important paras on this concept. If you are able to mention para in case this question comes in the examination, very good. If not, simply say as per the Ind AS 7. Right? Now, what would be the answer now? So the answer is, considering the above guidance of Ind AS 7, For the financial year end 2002, the total consideration of 15 lakh less 2 lakh 50,000 sitting in the balance sheet of the acquiring company, that is net amount is 12 lakh 50,000, will be shown where under the investing activity. And what would be the nomenclature of this transaction? Acquisition of a subsidiary, net of cash acquired. Now, there will not be any impact of the issuance of equity shares as a consideration in the cash flow statement, right? So, in the cash flow statement, there wouldn't be anything about the equity share issued as a part of the total purchase consideration. However, a proper disclosure shall be given elsewhere in the financial statements by way of providing the relevant information about the issuance of equity shares for non-cash consideration. So here in the notes, I will be saying that I have acquired a company during the year as my subsidiary for the 70% stake. The total purchase consideration discharged is 45 lakhs, out of which 15 lakh is paid in cash and 30 lakh is paid by virtue of issuing equity shares of face value of rupees 10 at rupees fair 15, which is the fair value on the acquisition date, right? So in this note, I will disclose this information, but in the cash flow statement, there wouldn't be any space for this equity transaction, right? Further, in the statement of the cash flow for the year ended 31st March 2003, because additional cash is paid for the acquisition of additional 10% stake of the company B, this will be shown under the financing activity, 8 lakh. Clear?
Yes, sir. Clear, sir.
Okay. So let's have a 15 minutes break now, and then we will resume and be ready to do more practical questions on the preparation of the statement of cash flow. So break started now. We will resume back 8:30 sharp.
Okay.
Thank you. Okay, so we'll start with the question number 5. Again, this is a cash flow statement preparation question full-fledgedly. I'm reading the question for all of you. Entity A acquired a subsidiary entity B during the year. Summarize information from the consolidated statement of profit and loss and the balance sheet is provided together with this supplementary information, right? So balance sheet P&L is given and additional information is given, right? So this is the consolidated statement of profit and loss. Revenue 3,80,000, cost of sales 2,20,000, gross profit 1,60,000, depreciation 30,000, operating expenses 56,000, interest cost 4,000, profit before taxation 70,000, tax 15,000, and profit after taxation 55,000. Right. So this is the P&L piece of information, and then balance sheet. So this is the balance sheet. So the current year 2002 and 2001. So one more thing which I have observed, sometimes in the examination, the current year is given at this side and previous year is given at this side, right? And in spite of doing everything right conceptually, just because of these columns getting flipped in the examination question, we are messed up, and by the time we realize it, time has already gone, right? So please be careful with these years in the examination, right? I have seen the practice, sometimes this year is coming here and this year coming is this side, and everything goes on toss, right? So please be attentive how the information is presented in the examination question, right? It may be in the way that is the usual way of presentation, or it may not be, right? Now, because in the current question, it is all good, so we are not worried about, right? Then cash and cash equivalents, trade receivables, inventories, property, plant and equipment, and goodwill. Then total assets, liabilities, trade payables, income tax payable, long-term debt, total liabilities, shareholders' equity, and total liabilities and shareholders' equity. So balance sheet tallied. Okay. So this is the balance sheet information. And then additional information is also given. All the shares of the B Limited were acquired for 74,000 rupees in cash. The fair value of the assets acquired and the liabilities assumed were inventories 4,000, trade receivable 8,000, cash 2,000, property, plant and equipment 1,10,000, trade payables, trade to long-term debt, goodwill, and the cash consideration paid. So this is the information about the assets and liabilities acquired and assumed respectively, along with the PC discharged. Prepare the consolidated cash flow statement for the year 2002 as per the Ind AS 7, right? So now you have to come up with the cash flow statement preparation. And as I previously mentioned, three key things. First of all, the most important thing is the solution is correct. The next most important is solution is presented well so that it is easily understandable by the examiner. And the third, you must have completed this within the stipulated time, right? So with these three key expectations, you try your hands on this question, and I give you 10 minutes time to come up with your draft answer, and then we will discuss line by line the cash flow statement preparation along with the supporting working notes. And then I will summarize with the key learnings from this question, which you can register somewhere. So 10 minutes on you to try your hands on this question. Fine.
Yes, sir. Fine.
Perfect. Okay, are you ready?
Yes, sir.
So you completed the cash flow statement preparation, or uh, you are still halfway?
Yes, sir. I completed. As you said, no, I stuck in only the tax matter, but others I am through. I stopped at this tax, and
Mhm.
others I got through, sir.
Okay. And were you able to do the working capital adjustments?
Yes, sir.
You did it. Okay. Perfect. So let's
Except
see.
except the taxation, others I did it.
Understood. Understood. Okay. So let's see which all items and which all sections you are done correctly. So first of all, as I am emphasizing again and again, right? Presentation matters a lot, right? Especially whenever the ask of the question is to present, the financial statement, be it the balance sheet, be it the P&L, or be it the statement of cash flow, right? So presentation matters a lot. So always ensure that you are presenting the main solution very nicely, right? For example, the heading of the cash flow statement. Statement of cash flows for the year ended 2002, right? Extract. If the complete cash flow we are not giving, right? Or uh, otherwise we will not say the extract, right? Then we will start with cash flow from operating activities, profit before taxation, the usual starting point for us, 70,000 as given in the question. Correct? Until now, all good?
Yes, sir. I took profit before tax only.
Right. Then adjustments for the non-cash item would be the first adjustment section, which we will be doing, right? So depreciation 30,000, correct? Given in the question.
Yes, sir.
A- any other non-cash item are you able to see apart from the depreciation? Then we will start doing the working capital changes, right? So depreciation is added back, then working capital changes. So which all items will start with? Say number one, inventories. Now, inventories decrease in inventories, right? So, because inventories are getting decreased, it will be added back, right? Because this is a inventory is an asset item. Now, how this 9,000 is arrived? Are you able to arrive it at 9,000 or some other number you did arrive?
Yes, sir. I arrived 9,000 rupees, sir.
9,000 rupees, right? Did you also showcase somewhere how the 9,000 was derived in your working notes?
Yes, sir.
So always try to present the working notes neatly, so that, examiner will be able to see that you have computed it and not copied it from somewhere, right? Here and there. So total inventories of the group at the end of the year, 30,000. This is given in the question. Then inventories acquired during the year from the subsidiary. How much is that? 4,000. Now, why this 4,000 is being deducted here? Because this 30,000 is given as the closing balance, right? After the subsidiary companies acquired. And acquisition of 4,000 worth of inventories is being done from this acquisition. So this 4,000 is already included in this 30,000. Yes or no?
Yes, sir. From the opening balance, they included 4,000 as well.
Right. So 30,000 minus 4,000. So 26,000 would have been the closing balance had this acquisition not taken place. Is that fair to say?
Yes, sir. Perfect.
Right. So from this 26,000, I will compare the opening inventory of 35,000. Right. So my opening inventory was 35, closing was 26. So delta is 9,000. So this 9,000 is to be considered as decrease in inventories in the statement of the cash flow. Is this clear adjustment to everybody?
Yes, sir.
Perfect. Then similarly, let's do the adjustments first. Then similarly for the trade receivable, right? So what is my closing balance? 54 given in the balance sheet. How much I have acquired by way of subsidiary acquisition during the year? 8,000. So this 8,000 is inclusive within this 54,000, right? So what would have been my closing balance had this acquisition not done in the during the year? 46,000. Opening trade receivable was 50,000. So decrease in trade receivable is how much? 4,000, right?
Yes, sir.
Similarly for the trade payables. So trade payables at the year end is 68,000. 32,000 is assumed during the acquisition. So idle closing balance would have been 36,000 had the acquisition not taken place. And opening is 60,000. So the delta is 24,000, right? So this is how, in this case, we are computing the working capital changes, right? So for all these items which are being acquired during the year, we have to clearly mention the working notes, right? So all these items are adjusted, right? Inventories, trade receivable, and the trade payables, right? So these are the working capital items. Cash is anyway cash. PP&D is not working capital. Long-term debt is not working capital. Goodwill is not working capital, correct? So we are not going to do anything under the working capital changes for these items, right? Rest all we are already done with. Now we'll be back to our main cash flow statement. So depreciation we had added. Working note number one, decrease in inventories added. Working note number two, decrease in trade receivable added, right? And then working note number three, decrease in trade payables deducted, right? Then interest paid to be included in the financing activity, 4,000. From where it is coming, 4,000?
It is from consolidated P&L.
Right. So here it is, the item, right? So this 4,000 has already been deducted to arrive at the profit after before taxation and taxation deducted after taxation. So we are making a adjustment back because this is not a operating cash flow item for the purpose of cash flow. Hence we are adding it back, right? So we will add back the interest cost of 4,000 and we are also adding back the taxation. Taxation, how the taxation is arrived? 11,000 plus 15,000 minus 12,000. So 12,000 would be the opening in the balance sheet, correct?
Sir, opening is the 11,000, sir.
Yeah,
Closing is the
opening is 11,000, right? So 11,000 plus during the year payment 15,000 minus the closing balance. So income taxes paid during the year is how much? 14,000, right? So 14,000 is uh, hereby adjusted as a taxation matter, and then net cash generated from the operating activities 79,000 is arrived, right?
sir, could you please show this taxation alone in the T format, sir? I'm not able to get the. So 15,000 we paid, that is for sure.
So from where the 15,000 is coming?
It is from the profit and loss account. We paid taxation 15,000.
Profit and loss account, right? So 15,000 is the amount of tax during the year. So in the P&L, whether the payment comes or the provision for taxation comes. So in the P&L, my question is, whenever we prepare P&L, statement of P&L, what tax amount comes there? the real exact actual payment amount or the tax liability amount which is arrived during the year for the current year profits as per the computation.
It will be the current tax paid amount.
Current tax liability amount, right? As
Yes, sir.
arrived as per the computation. So 15,000 is that much, right? Minus 12,000 is my, from where the 12,000 is coming.
12,000 is a balance sheet item. Is 12,000 is a closing balance.
12,000 is closing balance, right? Correct?
Yes, sir.
So 11,000 opening balance, 15,000 liability during the year created, minus closing balance 12,000. What will be left with? The payment made during the year.
Okay. Okay, sir. I got it now.
Got it? So how the ledger? Okay, let's create the taxation ledger, right? So this is the ledger, right? My opening liability, opening balance was how much?
In the credit side,
11,000,
11,000.
right? Right? My opening balance. And then how much provision I have created during the year?
12,000 rupees.
15,000,
Sorry,
right?
15,000. Yeah.
So how much it is? 26, right?
Yes, sir.
So I have a total liability of 26, but my closing balance is how much? 12,000. So it means I have discharged some of the liability. So 26 minus 12, how much?
14,000.
So it means 14,000 is the discharged liability during the year, right? So that I have derived. So sometimes in the examination question, direct information is given, taxes paid during the year, right? So we don't need to juggle up with these adjustments, right? But in case the question doesn't state this information directly, then we need to figure it out, right? By doing this ledger balancing, right? So this is the 14,000 payments made during the year. And in the cash flow statement, what amount we consider always? Actual cash paid,
Paid.
right? Then after all these plus and minus, what we will arrive? The net cash generated from the operating activities. So in this question, 79,000 is positive. So what are the wordings we are using? Net cash generated. Correct?
Yes, sir.
Then cash flow from investing activity. Cash paid to acquire the subsidiary. 74,000 we have paid, 2,000 we have
Cash amount is there. Well,
received
purchasing.
on the balance sheet of the subsidiary company, right? And by virtue of para, which para?
46A.
No,
Not that. I am not remembering, sir, exactly. I think 72 or something.
no, para 46,
46.
right?
I
So,
said 46A.
so that para says whenever we are receiving any cash on the balance sheet of the subsidiary company by at the time of acquisition, that needs to be deducted from the total cash payment for the acquisition. So 74 minus 2, 72,000 would be the cash outflow to be presented on the statement of cash flow for this acquisition. And then because there is no other investing item, so this is the only investing item. So 72,000 is the net cash outflow from investing activity, right? So this is outflow, correct?
Yes, sir.
And then cash flow from financing activity. So interest paid, which we have added back above, now needs to be presented under financing interest payments, right? And then there is no other item under the financing activity as well. And hence, this is the only item. So net cash outflow from financing activity. Now, summation of the all these three give us the 3,000 positive increase in cash and cash equivalents during the year, right? Then opening balance I will add and closing balance I will arrive. which is tallying with the balance sheet, right? So this is all given in the balance sheet. Sorted?
Yes, sir. Sir, I have one question. Now we have only the 4,000 is that finance activity interest paid. We are mentioning cash outflow. If,
Yeah.
if, if there is only inflow is there, can
Hmm.
we say that the cash flows inflow?
Yes, cash inflow. Then in that case, it will be, the word will be inflow from financing activity.
If both are there, that situation,
So,
cash
so if
flow.
no, no. So if both are there, then it depends on what is the net amount. So suppose you are paying interest worth rupees 4,000, right? And
Okay.
suppose you have some other financing activity inflow, say loans taken, say for rupees 10,000, right? Then it will give you the 6,000 positive, correct?
Yes, sir.
Then in that case, what you will say? Net cash inflow from financing activity.
Okay. Only the end result based on the
End
end
result.
result.
Yes,
Okay.
end result.
Okay.
Because in this question there is only single item. That's why I think this query pops up to you, right? So it is
Okay, sir.
always on the total position, not on the individual position,
Okay, sir.
right?
I got it. I got it, sir. Thank you.
Right. Now this is all done. Any query or question on this?
No, sir. It's very
Okay.
clear now, sir. Thank you.
What are the key learnings from this question? So it's not about only practice, it's about noting somewhere the key learnings from the solution which we have done. What are the key learnings from this solution or this question?
Sir, my key learnings actually in the cash value subsidiary investment, the 70 cash, 74,000 minus 2,000, we got to reduce it. And
Hmm.
also the income tax, whenever I have doubt, we have to put the T format that will be work out. And also that working capital workings need to be put very careful on this.
Right.
Because that,
So
yeah, purchase is there, subsidiary purchase is there. We have to reduce the purchased amount, then we have to see what is the decrease or increase.
perfect. So let me just repeat this. You already covered nicely. Key learning number one. If there is an acquisition of subsidiary in question, then we need to be clear that we need to figure out the working capital changes correctly because there might be certain items being acquired during the acquisition and those are already inclusive of the closing balance which is given to us in the examination, right? If they are already inclusive, then first of all we need to deduct whatever is acquired, right, from our closing balance, and then that balance needs to be compared with the opening balance in order to arrive at the right delta between the closing and opening movements for our working capital changes. Number one, key learning. Number two, key learning. If there is an acquisition, we need to be cautious about considering the cash outflow on purchase consideration, right? If the purchase consideration is discharged in cash, then that cash shouldn't be the outflow. Rather, the cash outflow for the purpose of statement of cash flow is total purchase consideration discharged in cash minus the cash acquired on the balance sheet of the subsidiary company, right? So this is the net cash outflow needs to be presented on the cash flow statement, right? Third key learning, we will not accept the amount of taxation given in the P&L on its face value. We will reconcile the taxation ledger as well with opening provision during the year from the P&L and the closing from the balance sheet, and then we will arrive at the taxes paid which needs to be considered as an adjustment to the cash flow statement, right? So taxation ledger, property plant and equipment ledger, intangible assets ledger, all these ledgers we always need to reconcile on our own because there might be certain hidden transaction in those ledgers which we will not be able to identify unless and until we reconcile these ledgers on our own, right? And the last piece, always we will focus upon the nomenclature we are using: cash generated, cash outflow, right? On the totality basis of the three activities, right? Not on the individual line items, right? Perfect. Okay. Next question. During the financial year 2019-2020, Akola Limited have paid various taxes and reproduced the below mentioned records for your perusal. Capital gain tax of rupees 20 crore on the sale of the premises at the sale consideration of 100 crore, income tax of rupees 3 crore on the business profits of 30 crore, a dividend distribution tax of rupees 2 crore on the payment of 20 crore dividend, income tax refund of rupees 1.5 crore, and refund of taxes paid earlier for the business profits. You are supposed to determine the net cash flow from operating activities, investing activities, and financing activities of Akola Limited as per the relevant Ind AS. Now, at the very start of the session, I discussed about key matters, right? And one of the key matter was the taxation. And I made one statement that taxation follows the underlying transaction color, right? So wherever the underlying transaction is sitting, if it is sitting in the operating activities, the taxation related to that transaction will go under operating, and if it is sitting under investing activity, then it will go under the investing activity. And if it is sitting under the financing activity, the taxation piece will also go under the financing activity, right? So taxation item has no color. Taxation simply follows the underlying transaction, right? Now, in this question, we have all in all four tax related transactions, and we need to prepare the cash flow statement with the limited information, right? So let's discuss. Para 36 of India 7 Inter states that when it is practicable to identify the tax cash flow with an individual transaction that give rise to the cash flow that are classified as investing or financing activities, the tax cash flow is also classified as the investing or the financing activity as appropriate, right? So which para says this? Para 36. So para 36 of the India 7 says that, boss, if the taxation is specifically related to a transaction which is either investing or a financing, then tax item on that transaction will also be investing and financing respectively. When the tax cash flows are allocated over more than one class of activity, the total amount of taxes paid is disclosed. Accordingly, the transactions are analyzed as follows. Now, sale consideration is an investing activity because office building is sold, right? And office building was my investment. When I purchased it, I showed under my investing activity. So when I sell it, I also disclose it under investing activity. So 100 crore is the sale consideration from the sale of this asset, right? So that is the investing activity. So capital gains tax, which is paid on this, will also form part of my investing activity under the statement of the cash flow. Correct? Agreed?
Yes, sir. Yes, sir. Agreed, sir.
Then my PGBP income, profits from business and profession, is how much? 30 lakhs. And tax on PGBP is 3 lakhs, right? Again, sorry, 3 crore, 30 crore and 3 crore. So my PGBP is my operating activity. So tax on my PGBP is operating activity. Then dividend payment is my financing activity, 20 crore, and dividend distribution tax of 2 crore paid on this 20 crore is also my financing activity, right? Then income tax refund received during the year, 1.5 crore, is my operating activity. Why? Because it is given in the question. Here it is. Income tax refund on taxes paid in earlier periods for PGBP profits, business profits, right? Now, once the color is identified of the transaction and the taxation follows the transaction, so I will be able to construct the relevant extract of the cash flow statement. So my operating activities total would be 28.5 lakhs. How this is arrived? So this is arrived 30 lakhs, 30 crores minus 3. How much? 27 plus 1.5 refund. So 28.5. Clear? Then investing activity 100 minus 20, 80. Correct? And then financing 20 plus 2, 22. So total cash uh, generated in the cash flow statement is 86.5 crores. Any doubts on this?
Sir, here the presentation is not done in the proper way, sir. That activity is showing only what is asked of the question, sir.
Hmm.
I could not understand.
So you need to determine the
Okay,
cash
okay.
flow from operating activity, investing, and financing. Question is not asking to prepare the cash flow statement. Question is saying determine the cash flow from investing, operating, and financing.
Right, sir. Perfect. Thank you.
Perfect. So we always see what is the ask, right? If the ask is to prepare the cash flow statement, we will follow the preparation of the cash flow statement in the proper presentation, right? But if the ask is just to uh, showcase the cash from these three activities, then probably we can use the tabular format as well, right? Now, any doubt on this 22? So, in operating, we have deducted the taxation. In investing, we have deducted the taxation. But in financing, we have added the taxation. Why so?
Yes, sir. Sir, this is the income tax refund which we received.
No, 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 no. Not
Which
about
one?
income tax refund. I'm talking about this 22. Are you okay with this 22?
Yeah, 22 is fine, sir. This is a dividend payment is part of the financing activity. The reason is for the shareholder, it's a financing activity.
Right.
For that, we are paying the dividend. Suppose if the dividend is received from the outside, it will be the investing activity.
No, no, that's fair. But my question is here we were deducting the tax payments, right? For example, 100 crore was the proceeds and 20 crore was the tax payment. So I have presented 80. Then 30 crore was the business profits, 3 crore was the tax, plus 1.5 was the refund. So I presented 28. But here 20 was the dividend payment and 2 crore was the tax. So instead of presenting 18, why I'm presenting 22? Is this
Okay,
the query?
okay, sir. Then in this case, the dividend payment is a separate payment, 20 lakhs to be paid separately,
Hmm.
20 crore. For that dividend, the dividend distribution tax also to be paid, 2 crore.
Right.
So the both are the payment. In
Both are
terms
the
of
payments.
yeah, in the terms of sales consideration, 100 crore we will be receiving from upon the sale. Upon the sale, we will be paying 20 crore as a tax. So that
Correct.
net effect will be 80 crore only.
Perfect. Perfect. So I just thought to discuss this. Although this is deemed understood, still I thought to avoid any confusions. So in the financing activity, both the items are resulting in the cash outflow. That's why the tax is also added, right? So in the financing activity, I am paying the dividend, I am paying the tax. So both are the payments, so both are added together, right? But in other two cases, in my operating and investing, I am receiving the sales consideration, I am receiving the business profits, and I'm paying the taxes. So one is the receipt, one is the payment. That's why they are netted off, right? Perfect. Okay, let's do this question. What will be the classification of the following items in the statement of the cash flows? Assuming scenario 1, the entity is the banking and financial institution, and the scenario 2, banking entity is the other than banking and financial institution, right? So these are the items. So let's discuss them directly. The following are the classifications. So what is the item? Interest received on loans and advances given. So for banks, this is operating
Yes.
activity because
Yeah.
it is the normal part and parcel of the business of the banks, right? Banks used to give loans and earn interest. So interest is their operating income, right? Lending activity is the business for them. So interest earned on any loans or advances given to other parties is a operating activity for the banking and financial institutions like NBFCs. But for other entities, for example, Tata Motors, Reliance Industries, it will be investing. Clear?
Yes, sir.
Then interest paid on deposits and other borrowings. So banks also borrow money. Yes or no? Yes. From whom? All the account holders like you and me. We have the bank accounts opened for us and we deposit money there in the savings account, fixed deposits account, recurring deposit accounts. So for the bank, it is a loan taken, yes or no, from the general public. Yes. On these loans, bank is paying interest, right? So for them, taking loans and giving loans is a part and parcel of business activity. So that's why it is operating for them. But for Tata Motors, Reliance Industries, it is a financing. Clear?
Yes, sir.
Interest and dividend received on investments in subsidiaries, associates, and other similar entities. For both of them, it is a investing, right? Because their investments in their subsidiaries, JVs, and associates, and if they are receiving any interest or dividend on those investments as declared by the those subsidiaries, associates, or JVs, then this would be the investment activity for them as well, right? Because no company, whether a banking company or other company, has a business of purchasing subsidiaries, associates, or JVs, correct? So this is not the business. So it is not the business, it is not the operating activity, right? So it is a investing activity only for all the entities. Clear?
Yes, sir.
Dividends paid on the preference shares or equity shares, including the tax on the dividend paid. So always financing, right? So if we are paying anything to our owners, then it means it is a financing activity, right? Because we have taken funds from them, right? So dividend on preference shares or equity shares and the taxation on that is always financing for all the entities, irrespective of the nature, whether it is a banking or other. Finance charges paid by the lessee under the finance lease, always financing activity for everybody, right? Because it is a finance lease and lessee is paying the lease charges. It is a financing activity. Clear? Payment towards reduction of the outstanding finance lease liability. Again, the financing activity. So if there is any outstanding lease liability on the balance sheet under a finance lease, and if I have discharged that obligation during the year, it will be presented in the statement of cash flow under the financing activities for banking institution as well as other companies, right? Clear? Interest paid to vendor for acquiring fixed assets under the deferred payment plan basis. Always financing, because we are purchasing a machinery from the vendor on a deferred payment terms and we agreed to pay the interest. So it means we have simply financed our machinery instead of from bank, but from the vendor only. So irrespective of the fact whether we are paying interest to the lender or to the vendor, doesn't matter. What matters is we are paying interest on the machinery finance. So that is a financing activity. Principal sum payment under the deferred payment basis for the acquisition of the fixed assets. So what we are doing, we are discharging the principal obligation under the deferred payment plan for acquiring fixed assets, property, plant, and equipment. So, property, plant, and equipment is always an investing activity. So, payment made for the acquisition of property, plant, and equipment will also sit under the investing activity. Clear? Penal interest received from customers for the late payments. Always operating, because if we are receiving anything from our customers, it is a operating activity only, right? So suppose customer of HDFC Bank delayed the EMI payment and HDFC Bank levied additional interest. So it will be operating activity, yes or no? Yes. Tata Motors sold the car to the customer and customer made the payment late. Tata Motors imposed a penal interest on the customer. Again, it will be operating activity, right? Because this is a penalty charged from the customer for delaying the payments. Penal interest paid to the supplier for the late payments. Again, the operating activity, right? So any late payments, if we are making to our suppliers, then any penalty we are paying, it is a operating activity. Interest paid on the delayed taxation payments. So for banks and financial institution, it will be operating, and for Reliance and Tata Motors type of companies, it will be financing. Why? Any specific reason or logic for this?
So tax payment means they are paying the interest. It's a kind of loan taken. On the income tax, we are making the delay in payment, which means it's advance.
Mm-hmm.
So we
No,
are
no.
classifying as a
So,
financing activity.
so for bank and financial institution, it is operating, while for others it is financing. Why it is so?
Sir, interest payment and interest receipt is a form part of the business. It's a normal activities for the bank. So
Hmm.
it is classified under the operating activities for the
Okay.
bank is
Hmm.
concerned.
Okay.
Why it is a financing activity under the normal category means the
Hmm.
income tax. Uh, Income tax is a, if specificity is given the tax payment,
Hmm.
then that is the respective activity. If it is a tax means it's capital gains means tax means it is a investing activity. Otherwise, it is not specifically mentioned. It is a operating activity. Here, why it is a financing? Yeah, that delay in payment of the income tax, it will be treated as a loan taken.
So in all the story, the last sentence is very apt. Because for other companies, if we are delaying the tax payments, it means we are taking the loans from the income tax department. And if we are taking loans from the income tax department and making the interest payment on that loan, right? So that will be a financing activity, because we are financing uh, our business by virtue of delaying the tax payments, right? So one normal course, if I don't have funds and I have the income tax obligation, I could have taken a loan from bank and discharged of that obligation and paid the interest to the bank, right? In that case, it would be the financing. So instead of taking a loan from bank, I simply delayed the income tax department payment and income tax department levied the interest on me. So that is again also financing for the normal companies. But for the banks and NBFCs, it is operating only, because for them taking loans and giving loans is a operations. So if they are delaying the tax payments and getting interest charged by the department, then it will be interest expense for them in the normal course of business and again operating activity, right? interest on tax refunds. So for NBFCs and banks, again, it is operating activity only because they are into the business. Money is the product for them, right? So giving money, taking money, giving money, taking money during the course of business is their operation, right? So they, for them, it is operating. But for other companies, it is a investing. Why? Because they have made excess payments to the department and later on department refunded to them along with the interest. So it means they have deposited their money as an investment with the department and department paid interest on those deposits, right?
Sir, in point number 7, interest paid to vendor for acquiring fixed asset.
Hmm.
Why it is not operating activity for banks?
For banks. So what they are doing, they are acquiring fixed assets, right? Fixed asset acquisition is not the operation activity. So,
Only for the bank is receiving the deposit and giving the loan is the main activity.
right. So for bank, giving the loans and taking the loans is the operational activity, but acquiring fixed assets, is not the operating activity. Now they are financing their fixed assets by deferred payment, and on those deferred payments, they are paying the interest. So this is the financing, because they are financing their purchase of fixed assets. So for both of the companies, whether it is bank or general category, it is a financing activity only.
And sir, I have also doubt point number 2.
Point number two. Mhm. Interest and dividend received on investment in subsidiary associates and JVs, right?
No, sir, point number 2.
Sorry.
Interest paid on
Point number two.
deposit
Interest on deposits and other borrowings, right? So interest
for other entities.
for other. So interest paid on deposits and loans taken, right? It is a financing activity. For example, Reliance, right? Reliance is taking a loan from HDFC Bank, right? Then Reliance is paying the interest. So for Reliance, it is a borrowing, yes or no?
Yes, sir. But
Right? Yes. So on
deposit
this borrowing,
means
HDFC is charging interest from Reliance and Reliance is paying that interest. So for Reliance, interest paid on borrowings is a financing activity, yes or no?
yes.
Yes. Another example, Reliance issued public deposits, general public deposits, right? So retail uh, public has subscribed the bonds or deposits issued by the Reliance. Now Reliance is paying interest to millions of the retail's investors. So on these deposits, so what is the nature of this interest against the financing activity for Reliance? Because Reliance has taken loan instead of one bank, but from the general public at large in the form of public subscribing to the Reliance FD, right? So Reliance is paying the interest to these massive public. So this is a financing activity for Reliance.
Yes, sir.
Perfect. Okay. Let's move to the question number 8. From the following data, identify the nature of activities as per Index 7. So let's do it here directly. Cash paid to employees, salaries and wages payment, operating activity.
Yes, sir.
Correct. Cash paid for development cost, So some intangible assets are getting developed for which the company has made the cash payment. Investing activity, borrowings, repayment, financing activity,
Yes.
cash paid to suppliers, operating activity,
Yes, sir.
loan given to the director of the company, investing,
Yes, sir. It's in investing. Their business is not to give the loan to director. It's
correct.
not operating activity.
Bonus shares issued, investing, financing,
Go- No, sir. It's a
non-cash.
non-cash because the cash transaction is not involved in here.
So as long as the transaction doesn't contain the cash element, we simply ignore, right? So bonus shares doesn't involve cash, so non-cash item, right? So no, neither operating nor investing nor financing. Dividends paid, financing always. Cash received from the debtors, operating. Plant and machinery sold, investing. Depreciation, again non-cash. Clear?
Yes, sir.
Advances received from customer, operating. Working capital changes. Purchase of goodwill, goodwill purchased, investing. How do you purchase the goodwill? You simply go into the market and ask for a goodwill.
No, sir. It's a part of business combination.
Right. It's a part of business combination. So as and when the company is acquiring any other company, right? So during that acquisition, the goodwill is calculated and recognized. So that is called investing activity because we have just learned whenever the company is acquiring another company, the purchase consideration discharge is cash. In cash is investing activity, right? So whenever we purchase any company, any goodwill acquired is also form part of the investing activity. Now, do I need to disclose purchase of goodwill under the investing activity separately in the statement of cash flows?
Yes, sir. The goodwill purchase, we will go show
No,
the separate disclosure.
no. So we never present purchase of goodwill as an line item under the statement of cash flow. How it is automatically covered when we say the cash payment to acquire the company, like 15 lakh minus 2.5 lakh, which we have received from the subsidiary, 12.5 lakh, right? So that is the cash payment. So in the cash payment itself, it is coming, right? Separately, purchase of goodwill item is not presented. Otherwise, so I will end up presenting many more items: purchase of machinery, purchase of debtors, purchase of intangible assets, purchase of goodwill, purchase of X, purchase of Y, right? So,
Yes, sir. Sir, I mean only that the cash transaction only. What is the
yes,
cash portion
yes,
alone we will give. That cash payment, what we received from them, we will
yes,
reduce it.
correct.
Yeah.
Payment of the promissory notes, financing, no doubt, right? So, this is how the nature is identified for all these transactions. Any questions, any doubts until now?
No, sir. Clear, sir.
Clear? Now let's ready with your calculators and the pen and paper. Again, we are going to build a statement of cash flow, complete statement of cash flow, right? So this is again a full-fledged question. One of the subsidiaries of the Build Well Limited submitted to the Central Finance its summarized statement of the profit and loss and the balance sheet, right? So P&L and the balance sheets are given. So this is the P&L: net sales, cost of sales, depreciation, salaries, wages, operating expense, provision for taxation, and then operating net operating profit, non-recurring profit on sale of equipment, then retained earnings brought forward, dividends declared, and the P&L balance as at 31st March, closing balance, right? Summarized balance sheet 2000 to 2003. Remember, I mentioned in previously, we need to be careful about this because we are habitual that this is the current year and this is the previous year, but sometimes in the examination, they play with us, right? And error of sight will result into disaster. Correct? Property, plant and equipment, land, equipment and building, current assets, right? All these assets are given, right? Balances are given. Liabilities and equities, right? All these items are given. And thereafter, certain additional information. The original cost of the equipment sold during the year was 7,20,000. Prepare the statement of the cash flow. For only one additional information is given that one of the equipment is sold during the year for rupees no, sorry, original cost of the equipment sold during the year was rupees 7,20,000, right? So 7,20,000 was the original cost of that equipment which is sold during the year, right? Prepare the cash flow statement for the year ended 31st March 2003. And I already sensitized all of you that this is the opposite columns are flipped in this question. So this is 2002 and this is 2003. Generally this is the py column, generally this is the cy column, but in this case this is the py column and this is the cy column, right? So please calculate your working capital changes, movements and all other adjustments considering this columns correctly, right? So I'm giving you 10 minutes again. I wanted you to try first and then we will discuss the solution and then I will discuss the key learnings from this question. So
Okay.
10 minutes on you. Okay. Did you try? Are you ready?
No, sir, not it fully.
Okay. Take 2 minutes more. No worries. Ready?
Yes, sir, please carry on, sir.
Okay. So, were you able to arrive at the cash flow from operating activities at least?
Yes, sir.
Okay. Okay. So, as I previously mentioned, whenever we have, the task of preparing the complete cash flow statement, right? So, we should always focus upon first the working notes, right? Because unless and until we arrive at the adjustments correctly, right, our cash flow statement will not tally, right? So, prime focus should be, to reconcile some key ledgers first, right? So, the ledger number one, building and equipment account. Ledger number two, the accumulated depreciation on building and equipment account, right? So these two ledgers, first of all, we will start reconciling, right? So balance given in the question, opening balance 36 lakhs, right? And then sale of asset during the year is given in the question of 7 lakh 20,000, right? So 7 lakh 20,000 given in the question is the original cost, right? Original cost of the machine, right? And this is the balance, opening balance, right? And then closing balance is also given in the balance sheet, 57 lakh 60,000, right? So constructing this ledger, we will be able to arrive at this balancing figure. And what this balancing figure of 28 lakh 80,000 would be, it is the purchase during the year for the building and equipment, right? So in the question, only one piece of information is given, sale of asset. But question has not mentioned anything about the purchase of the building, right? But in our cash flow statement, whenever we are preparing the cash flow from operating activities, we always need to mention both sale as well as purchase of the building and equipment account, right? So if purchase is missing in the additional information, we need to find it out ourselves by constructing the ledger. Is that clear?
Yes, sir.
Right? Then second, building and equipment accumulated depreciation account. Again, opening balance 12 lakh is given in the balance sheet and closing balance 13 lakh 20,000 is also given in the balance sheet, right? Then what is the depreciation amount during the year is given in the P&L, 6 lakhs, correct? Are you able to see these three information pieces from the balance sheet and the P&L extract given
Yes,
in the
sir.
question? Then what would be the balancing figure? 4,80,000. This would be the balancing figure. And what this pertains to the sale of asset depreciation account. So this machine 7,20,000 which is sold during the year on the debt, what would be the depreciation? 4,80,000. So 7,20,000 is the original cost minus 4,80,000 is the accumulated depreciation on that, right? Clear? Which is computed here in the third working note. So original cost given in the question, right? 4,80,000 we have arrived at with this ledger reconciliation, and then net cost is 2,40,000. Net cost means WDV, right? Now profit on sale of asset is given in the question, or sale is given in the question. So profit is given in the P&L 1,20,000 we have realized. So if I add the profit to the WDV, can I arrive at the sale consideration?
Yes, sir.
Right? So this is how I will be arriving at the sale consideration, which is very important because it will be flowing back to the investing activity. Yes or no?
Yes, sir.
Right? So these ledger reconciliation is a crucial task. I am repeating again and again. Try to practice, reconciling these ledgers, on a priority as and when you are uh, doing the cash flow statement questions. So first of all, quickly construct these ledgers and reconcile them, arrive at the balancing figure, identify those balancing figure is pertaining to what item, right? And then, incorporate or use those hidden information items in the cash flow statement preparation. And the last ledger which we need to reconcile is the tax account. So as I previously mentioned, just note down property, plant and equipment, intangible asset, accumulated depreciation, and the taxation. These are the four ledgers you always need to reconcile, right? To identify the hidden information pieces. So balance given in the balance sheet, opening and closing, correct? And P&L provision is given in the P&L. So what is the payment made is the balancing figure of 8,68,000 during the year for the tax. Clear?
Yes, sir. Clear, sir.
Right? Now, once we are done with these calculations, we are ready to simply populate the cash flow statement, which is one of the easiest tasks to do, right? So we'll start with cash flow from operating activities as usual. Net profits before taxes and extraordinary items 7,20,000 plus 8,80,000 given in the question 16 lakh, right? Then non-cash adjustments will start making 6 lakh. Operating cash flow before working capital changes 22 lakhs. Increase in inventory. Now we will simply do the calculation by delta from the balance sheet figures. And in the balance sheet figures, whenever you are calculating the delta, please focus current year and previous year columns, right? If it is flipped, then make the calculations accordingly, right? Otherwise, your signage will become issue. Then the advances, then the trade payables and the outstanding expenses, right? And finally, after all these delta adjustments, we will be able to generate cash flow from operating activities 38 lakh 68,000, right? So these are requiring no adjustments. So these are simple plus and minus, right? Then income tax paid 8 lakh 68,000, which we have computed in our working note, right? And finally, the net cash flow from operating activities, right? Because the cash is positive, so we are saying cash from operations, right? Then cash flow from investing activity, purchase of land, which we have identified in working note of the property, plant and equipment. Then purchase of building, again same note, and the sale of the equipment 3,60,000, which we have arrived at by adding the profit to the WDV, correct? So net cash used in investment activities 30 lakhs, because the cash is negative, so we are using the word net cash used in investing activities. Then cash flow from financing, issue of share capital. Now how did we identify this? Again in the balance sheet. So if in the balance sheet there is a movement in the share capital account, then it means either we have issued or we have paid back the share capital, right? If it is constant, no adjustment. If there is a movement, then there is a adjustment required. And because any movement in the share capital is a financing activity, so we will simply capture the movement under the financing activity, right? So because there are only two movements, one is the issue of share capital and again the dividend payment, which is given in the P&L statement, right? So net cash is the cash flow from financing activity, because we have issued the share capital, cash is received, and we have paid the dividend. So net cash received is 1,20,000. So cash flow from financing activities, right? Net cash increase in the cash and cash equivalents after summation of all opening cash given in the balance sheet, closing cash given in the balance sheet. The cash flow statement is reconciled. Clear?
Sir, extraordinary item 8 lakh is not there in question.
Is not there in
Net
question.
profit and extraordinary.
Let me go back. So net profit is given, net operating profit 7,20,000, right?
Yes.
And what you are saying, what is not available?
8 plus 8 lakh 80,000. That is extraordinary item.
Hmm.
In
Extraordinary item. Just a minute. So next, net profit before taxes and extraordinary items, right? 7,20,000 plus 8,80,000. So 8,80,000 is the taxation item. 8,80,000. Here it is. So the nomenclature is complete before extraordinary, but it doesn't mean that is extraordinary. It means taxation adjustment. Taxation is added back, non-cash item.
okay,
Because this
taxation is
because
added back.
because this
Tax
720
is
is after this. Clear?
yes, sir.
Okay. So key learnings from this question. What we will do? First of all, we will construct key ledgers. Which are those? Property, plant and equipment, intangible assets, accumulated depreciation, and the income tax. Correct? Once these are constructed and reconciled, we will be able to identify those hidden pieces of information which we need to use in our statement of cash flows. Like we identified the purchase of the plant and machinery, which was nowhere mentioned in the question, right? and then the sale proceeds of the equipment sold during the year, which was also not given in the question. So those two items we have identified by reconciling these two ledgers. And then income taxes paid during the year also arrived by reconciling the income tax ledger, right? And always focus upon on the good presentation of the cash flow statement supported by neat and clean working notes and these nomenclatures, right? These are very important if you want to score full marks if you have done the question right. So I hope you enjoyed the session today, and all the practical questions and the key learnings you must have noted down somewhere, whatever we have discussed today. With that
Yes,
note,
sir.
the session comes to end. Forum is open for any queries if you want to ask anything.
Yes, sir. This revision is really helpful, and some point is really clarified. And whenever you give 5 minutes, 10 minutes, 2 minutes time now, when I am practicing it, okay, that time only I realized some point. Okay, somewhere I am stucking on discussing. I could able to resolve that. Thank you so much, sir.
Thank you, Saminathan. So my purpose is, so I can simply discuss the solution, but that you can also look at the solution within the textbooks yourself as well, right? So I just want everybody to engage and apply their knowledge and skills so that they will be able to understand where they are mistaken, right? Unless and until those spots are identified and corrected, the session is of no use, right? So session is to discuss and clarify the areas and the spots where you were doing errors or mistakes, so that you can realize only by doing trying the questions first and then probably matching your questions with the solution, and then key learnings, of course, I hope you must be noting down somewhere.
Yes, sir. Perfect. Thank you so much, sir.
Thank you, all the very best for your examination. Have a good day.
Yes, sir.
Bye.
Thank you.
Ashokji, session is over. Thank you.